Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing can be found on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely, macro, and newsworthy geologic updates on Crescat's activist metals positions, both the positive and the negative news across our holdings as it arises. The discussion and topics will not cover all aspects an investor should consider when deciding whether or not to invest in any of the securities that are part of our presentation. The type of investments we will discuss can carry significant risks, and whether or not to invest should be a determination made with complete investor suitability in mind and in connection with a professional advisor. The topics and themes we will discuss are the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The forward-looking business opportunities we discuss may not come to fruition and may not have a significant impact to the value of the security. The presentation should not, under any circumstances, be considered investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and this presentation has generally been put together with that level of audience sophistication in mind. Any securities discussed do not represent any full portfolio and may only represent a small percentage of any strategy's holdings. These securities may or may not be held in any Crescat managed portfolio. With that all said, if you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. All right, so let's get started. It's been a busy week, a busy month, a busy year. It's been a very exciting year, and for us here at Crescat, because we have a lot of themes that have been playing out. Themes that we have been talking about really and positioning for now for the last several years, and it's really encouraging to see a lot of these investment ideas coming to fruition for the benefit of our clients. And let's get on with the presentation here. So what happened yesterday? President Trump signed yet another executive order. Surprise, surprise! But this executive order was one, declaring some new initiatives for critical metals, and it is. It should be no surprise that President Trump likes gold. And you can only, just look at the images of him in the Oval Office with all the new different gold accoutrements he has around him, the new gilded frames around the former presidents that he has up on the wall, the new golden coasters that he's got on his desk, the other gold trophies up on the fireplace there behind him. It's amazing. You can go back to the golden escalator and other things as well. But what is important? What is one thing that's really, almost shocking about this executive order? The U.S. has now declared that gold is a critical mineral, and along with copper and any other element, compound, or material as determined by the chair of the National Energy Dominance Council. So the National Energy Dominance Council, this is a new council that's also been set up by a Trump executive order here recently. But we've talked about I talked the last couple of times about the Bitcoin Act and how that is a red herring for we think a much grander plan that the administration has for gold, and it is it's a red herring in the sense that hidden within the Bitcoin Act is a clause that allows for the mark to market and revaluation of gold that also includes an effective monetization or QE or taking of that unrealized gain from where gold was marked at 42, is currently marked on the Treasury's books at $42.22 an ounce, to remarket to market and be able to take that gain and effectively, it's an effective QE that where that money can be literally debited or given to the Treasury general account. This is something that people say Trump is not is not a fan of gold, and because you'll note that Treasury Secretary Bessent was out there saying that we do not have a plan to revalue gold, and he was talking about how the gold bugs all thought that's what he meant when he was standing behind Trump in the Oval Office in the context of the Sovereign Wealth Fund. And he said, I can assure you that he said in an interview recently with Chamath, do not have a plan to revalue gold. Well, look at the Bitcoin Act, because it's not the administration's it's not the administration that's going to do it. It's Congress. And it's so anyway, this is really exciting. There's a huge effort now. There's going to be a huge effort now to permit a lot of the pending projects, whether they're advanced development projects that have been held up by permitting in the U.S. for new gold, silver, copper, zinc mining projects, other critical minerals, and this is something that we will be studying closely. Fortunately, we are invested across, I counted them up, we have 16 different companies that we're invested in that have mineral projects in the U.S., including we got, I could list a bunch of them off, and I will, because we've got Tectonic with an amazing new gold discovery in Alaska. We've just taken a stake in a new company that Quentin will mention a little bit later on today called Westward Gold, with a project in Nevada. We've got Silver 47. It's a private company. They have half of the Butte, Montana mining district, a big silver resource. That's a private company that we hope to be getting public here in the next several months. Western Alaska, a huge silver, zinc, lead discovery in Alaska. We've got when I said Silver 47, that's another one in Alaska. Silverbow Mining is our private company in Butte, Montana. Not to get those two confused, because Silver 47 was a private company that we just got public recently, and they have a silver, zinc, and lead deposit in Alaska as well. BCM in Utah, look at that stock. I think it was up today. Someone's been buying it, and we think they are potentially on to a big copper porphyry discovery. We've got Barksdale in Arizona. We've got Arcadia Minerals with a zircon deposit in Wyoming. We've got Bell Copper in Arizona. Falcon Butte, private company with a big copper discovery in Arizona. Intrepid Metals, a copper play, also in Arizona. And Red Canyon with a Nevada project. Ridgeline, Regal, New Legacy. Can New Legacy come back from the dead? I don't know, but they do have an interesting project there at Red Mountain. Anyway, let's go on to the next for me here. So gold has been breaking out to new all-time highs, but gold stocks are still below their highs back from 2010, 2011. What's going on? Let's hope this new Trump executive order can get things kicking again for the gold miners. And this is looking at the GDXJ, which is the large cap miners. We have positions in Newmont and Barrick and some of the other major mining companies as well, Agnico Eagle, across some of our strategies here at Crescat. We've got positions, gold fields and not Newcrest, but anyway, Northern Star and we've got positions in a number of bigger mining companies as well as our junior exploration stock. But the junior stocks are our biggest play because that's where the most opportunity is in terms of creating value, creating upside from new metal discoveries. Let's go on to the next. So here's looking at it another way. We've got two charts here. The white line on the bottom is the commodities to equities ratio, a chart which we've shown many times, which Tavi has shown many times, and this this is a macro play. This is why we spent the last 4 years building positions in commodity related stocks. But at the same time as we have in this blue line, this real the U.S. dollar on a real trade weighted basis, a near record overvalued U.S. dollar, near record undervalued commodities relative to equities in this case. And of course, those of you who've been watching this know that we have these big macro themes, regarding the likely peaking of the U.S. dollar, which is hugely supportive for a commodities bull market, and potentially an equity stock market further correction. These charts from Tavi are just illustrating both of those things. The setup today is just incredible. There's so much still to play out in our view regarding the bull market for commodities and the potential risk and potential bear market in overvalued large cap equities, where we do have significant short positions and short exposure still in our global macro and long short hedge funds, and we have been performing year to date. Right? Let's go on to the next slide. So are U.S. stocks overvalued? Are U.S. large cap stocks overvalued? This is looking at the Shiller Cape ratio, chart that Tavi put together, comparing valuations of U.S. large cap companies compared to the rest of the world. And PE ratios are historically insane, especially for U.S. tech stocks, which is the bar on the left. And yeah, the Mag 7 stocks have started to come down, and we've been short Mag 7 stocks and the S&P 500 and the NASDAQ 100, through put options and our global macro and long short strategies. And it's been performing well for us year to date. We're outperforming, proving up that negative downside capture ratio that I've talked about that we've been able to deliver in those funds. But there's still so much more to play out. We've only had like a 10% correction coming off of record high valuations, and this what we think is an artificial intelligence bubble. But look at the opportunities in commodity stocks and globally across other countries. Let's go on to the next. Again, valuations. This chart was produced just as of the end of last month, and you hear people talking about you know, the market is oversold, that you know, we've had a major correction. Well, we've only come off 10% across record valuations, and you know, the valuations that are on par with the tech bubble when it comes to the S&P 500. And there's just a lot more to play out in terms of this, you know, long commodity, short, overvalued U.S. large cap equities, you know, these core themes that we have at Crescat and are continuing to be positioned for. And so I think this is the last slide that I have for today. Tavi has been in Switzerland at a precious metals conference, and so he pre-recorded his macro session today. Let's get on with Tavi.
All right, everyone. I hope you can hear me well. Let's get started with my presentation and talk about macro and some of the ideas that we've been gaining conviction, and also refreshing our views, or things that we believe are relevant in this macro environment we're living now. This is one of the most important charts of this whole presentation. It's a lot of the slides that come subsequently are perhaps some of the reasons why I've been gaining more conviction on this. And I believe so. I don't want to speak for Kevin, but I believe he is becoming of the same view as well. This has been sort of an evolution of views. I mean, back 6 months ago, certainly we were not of the view that we are today, especially with yields. I think that this new administration and the policy changes we've seen throughout the last, call it 6 months, have certainly changed a lot of our opinions. But this chart specifically is something that reminds me a lot of listening to Stanley Druckenmiller when he used to talk about how he made most of the money in his career by shorting 2-year yields prior to major economic downturns. And I think the mix of policies that we're dealing with now and the level of concentration in markets is setting the stage for something very similar. I think that the 2-year yield, as shown in this chart, historically tends to roll over quite significantly, and potentially we could be at the beginning of something similar now. And this is going to be the reasoning behind it as we move along in the slides. One chart that I think it's remarkable is this U.S. policy uncertainty index that has been spiking recently. That's the red line you're looking at. It's spiking, second largest spike or surge that we've seen in the history of the index. The prior time was actually the COVID crisis, understandably surged at that period. But it has a very strong correlation or link with credit spreads. As I said this before in prior presentations, I've always been of the view that junk credit spreads are a very good representation of risk in the markets, complacency. When you are very complacent in terms of a market environment, you tend to see credit spreads be very tight. I actually had a research not too long ago. Right now, junk spreads are about 3.19. That basically showed that the only other time in history that the junk bond stayed below 3% for as long as it did recently, which just recently actually went above that 3 handle, was in July of 2007. And 2 months after that print, we actually saw volatility picking up during that time as the global financial crisis unfolded. Now, I think that this period is different regarding the set of outcomes that are creating the potential for a downturn in the market. But at the same time, I believe this is the white line is likely to increase substantially given the level of uncertainty. In other words, credit spreads are not reflecting what we think is the appropriate risk in markets right now, and why we think this is so relevant. If we go to the next chart, there's another way of measuring some sort of either uncertainty or risk in markets. And this is by Apollo, chief economist. And you can see here, University of Michigan, which came out in March 14th, so a week ago, exactly a week ago, that had expected business conditions in a year by believe consumers, and showing much percentage of those consumers believe it's getting worse, and it's worst printed in the history of this index as well, which has got a very long history, as you can see in the chart. Now, you have to question, okay, well, some other folks said, well, we've seen other times when that happened, and yes, that they kind of were linked to recessions and so forth. But the big story here is not even that. To me, the big story is actually the fact that 2-year yields are way too high relative to where the risk in the economy really is. The credit spreads is just another way of seeing that in the prior chart. But in this case, specifically, we're looking at the economy, deterioration of the economy, at least on the conditions perceived by consumers. And potentially, this could be also adding to that case. Magnificent Seven stocks are also something that have been leading the market over the last few years. And now we're finally seeing, more officially, this part of the market is not responding well. In fact, it's actually technically or officially in the bear market. And so down about 20%, and even with the recent rebound of the market, we didn't really see Magnificent Seven actually lead the way. In fact, if you look at consumer discretionary part of the market as well, outside of technology, which is mostly what you see in Magnificent Seven, you're also having trouble seeing any type of resilience. In fact, we're seeing the other side of that too. This is probably the chart of the day of that I've seen, at least today, but I think this was posted maybe 15 or 18 hours ago. The Federal Reserve lending outstanding and select programs, and so they basically aggregated a bunch of different programs that the Fed was running to supplement some sort of issues that we're having in the economy at different times, some of them being the bank term funding program and or even the Fed discount window borrowing, and some of those related to the banking problems we had in 2023. But the point being is that all that supplementary stimulus that the Fed was providing in the market has actually not been provided anymore. So as you can see in the chart, those things have run out, and maybe that is even more relevant than austerity, which maybe the jury is still out on the effectiveness of Doge and all those efforts that we're seeing from the administration to reduce spending. Potentially, but maybe would explain some of the tightness in monetary conditions recently, and what maybe also justifies the decline we've seen in equity markets is probably related to this chart that you're looking at the screen. It's a very very good chart that illustrates lack of liquidity coming from the Fed. So the Fed comes out and points that today, or I should say 2 days ago, that they're not going to be be cutting rates anytime soon here. At least there's no further confirmation relative to what the market is. Market is pointing to a direction of about a few cuts by the end of the year, and at the same time you have Powell taking a stance that to me is actually quite hawkish. I don't remember who, but I saw somebody saying something along the lines of it is important to know that this also happened in 2018. We saw a similar strategy by the Fed, of which Trump and the Fed were not getting along, and the Trump administration was basically forcing the Federal Reserve to cut rates and stimulate the economy through that, and eventually that happened. But prior to this, we actually saw a large sell-off in equity markets. That was 2018, of which remember that very well because we had substantial amount of short exposure at that time as well in our funds. But as you can see, there's another point out of this too. What Trump is saying with this tweet is not just forcing the Fed, but he's also making a point of that a lot of these policies that we're seeing from the Treasury side or from the government side, or if we want to separate the Fed and the others, you can see that rate cuts. That's what I wrote there in this slide. That's just my view, by the way, and I think the rate cuts are necessary to ease or alleviate the strain from austerity, tariffs, and the immigration policies. I mean, it's not just austerity. It's not just trying to accomplish reducing wasteful spending and all sorts of things. It's also tariffs will have a weight initially on economics or the economic growth, but immigration policy is, in my view, very underrated, and in terms of how much impact it could have in the economy. So the longer the Fed actually keep rates at these levels, the more damage it could be to the economy. And in my view, more damage you can see in the 2-year yield, because that's where the market really prices in recession, and where you tend to see that number actually starting to really say that we may see bigger problems ahead. On the other side of all this, you have the Fed, and under a lot of pressure. You have the government trying to cut spending. You have Europe going to a different direction, which is interesting because we got to understand from a global macro standpoint, what does that do to currencies and other things? And Germany just came out with, approving a package of about $1 trillion to on defense and infrastructure spending, which questions, again, the inflation problem. It questions a lot of things actually, and potentially drives yields higher, right? And it's I think what we're seeing recently of European yields, especially in the long end, moving substantially higher recently, have a lot to do with this. What people are not seeing is that there's a difference between what happens in the yield or in European bond environment versus what could happen with the currency side. When you have interest rates rising in Europe, and you have on the other side in the US a pressure to lower rates, that creates a rise in interest rate differentials that tends to have an impact on the currency markets. And this is the chart that I noticed. By the way, if you go back to the 1990s, a lot of currencies had a very strong correlation with interest rate differentials. And today, most of these currencies have lost some of that. And as you can see in this chart, this relationship potentially is coming back. And you can see this, the euro versus the dollar is in I believe it's in blue, and you can see. Oh, sorry, is it blue? Yes, it is blue. And the other one, interest rate differential, is in white. And you can see in this chart as well that the interest rate differential is potentially actually signaling that there is more appreciation for the euro ahead of us. And I'm a believer of that. I do think that the dollar is extremely overvalued for many reasons, and interest rate differential is just adds to that point for many in many ways. Another thing that it's been happening, and I think it's again off the radar and potentially has a lot of significance to the markets overall, is notice that first, the dollar is having its worst year-to-date performance in 30 years. Nobody is really paying attention to this, but not too long ago, I believe it was maybe 2 to 3 weeks ago, markets were down about 4% or so. I think NASDAQ and S&P 500 were down about the same amount, 3 to 4% for the week. And I saw the dollar down about the same amount. That brought my attention. I went back in history and looked at and plotted those performances over the years, and that was the worst performance of the dollar given that how much the market was down. We're entering a different environment. A lot of people are still, under the assumption that we're entering similar to '08, when markets go down, the dollar goes up. That's not my view at all. I do think that we're about to see is a change of what is supposed to work as a safe haven. Gold being one option, and in this case, in the near term, even the 2-year yield may actually act as a great hedge, in my view, as the market continues to falter. And why does this interest rate differential matter so much? I've mentioned this before. This chart is such an important aspect to the whole picture of currencies. And I said many times, and I believe it's one of the most important charts for policymakers, is the fact that we have interest payments to GDP in the U.S. at about almost double, triple, or in some cases even 5 times more than other countries. And so the U.S. is in this sense of urgency to cut rates much more than other countries. As we see that occurring, again, when I say cut rates, I'm not talking about just the Fed. I'm talking about the entire curve, just like Scott Bessent has said. And I listened to him very closely. What he said is, I want the entire curve to go down. It's not just the 10-year, the 30-year, the 7-year, the 2-year. It's the entire curve needs to come down. And he's not wrong about that. That's the easiest way to reduce fiscal spending. But that has consequences, right? As we see government spending declining, this is an older chart that we put out in 2024, July, on the ladder, that I think it's very relevant to now. I guess things have not really changed. They're starting to change. We're starting to see the rebalancing. But this chart shows you, first, in average, I call American fiscal exceptionalism. And we've seen the U.S. spend about 8.1% of GDP in fiscal spending, annually, in average, since 2009. And you look back with all these other countries, clearly, we haven't seen anything like this. We don't have any other country that is anywhere close to the U.S. in terms of that. Japan is one, but the U.S. is by far, in terms of pro-growth spending, is the largest amount. Although it has a large entitlement amount, there's a lot of pro-growth that actually cause growth in the U.S. to be stronger than in other countries. And that explains the bottom of this chart, which is the performance of U.S. equities versus the rest of the world. That you can see this, straight up line going up, from the left quarter, downward quarter to the right side, upper corner of the bottom panel of this chart, clearly going up significantly over the last decade or so. And what does that do if we start seeing a shift away from American exceptionalism? And while I do think that the chart that you're seeing in the bottom is probably going to look like the other way, it's probably going to go, and start a downward trend, that a lot of people are not positioned accordingly. Not only that, but also potentially, we could see other countries doing substantially better than we've seen. Well, that chart was about maybe 7 or maybe 9 months ago. And you can see that now we're seeing one of the best performances year to date for global equities relative to U.S. equities, at least in the history of this chart. This is substantial. It's not just the dollar. These things are all linked. It's the dollar's having its worst year. U.S. equities, or global equities versus U.S. equities, are having the best year. Do you see the link? Does that make sense? I mean, yes, it makes sense. It makes a lot of sense that we're seeing all these things connected in a big way. And then we're seeing European equities do very well. So on the left, let's look at the top there. Maybe I'll use my cursor on this if I can. I don't see it. There we go. Yeah. So you can see on the left here, you can see the Euro area versus US, and huge move on the blue line. On the green line, the same. You've seen over here, Germany equities have been doing very well versus US. And then at the bottom, you see the long term. And the long term is completely different, right? I mean, it's only barely damaged or barely made any difference in the chart over the long term, because the chart you're looking at the bottom is exactly the same chart as this one at the bottom, right? But inversed. And so we're just at the beginning of these transitions, in my view, and I think it's going to be very exciting for investors as we see money flowing out of the U.S. into other places, especially natural resources. As I said before, there's two types of imbalances happening in the U.S. There's an imbalance internationally and an imbalance domestically. The international imbalance is the fact that we have MSCI weightings of 73% U.S. equities, and all other economies have basically, single digits of weights. So U.S. equities are getting much higher weight than any other country in the world. No, when I say much higher, I'm talking about substantially higher, right? And then on the other side of this, you have also domestically the fact that concentration is very high across, a selective number of names. It's the Mag 7 technology sector that have been benefiting tremendously. What happens as we see the rotation out of those concentrated areas of the market into others, is where there's risk and opportunities. Let's talk about something else that we've been talking about for a long time that I think it's also a long-term trend, is the gold to S&P 500 ratio. We've seen that ratio reach four-year highs recently. And the real question was, okay, well, 4-year highs, what does that mean? Well, if you recall, there was a research we've done that looked at yield curve inversions. When you have a substantial amount of yield curve inversions, above 70% to be exact, basically we that triggers some of the best I should say assets, a combination of asset classes that tend to perform well, is actually the gold to S&P 500 ratio. And there are many reasons for that. Sometimes it's gold that does its own thing. Sometimes it's both. You have gold rising, S&P 500 falling, and sometimes you have S&P 500 falling, extremely, it very significantly, while gold, kind of holds its ground quite significantly, like it was in 08. Gold did decline in 2008 during that initial part, especially of the global financial crisis. But the S&P 500 had an even larger decline that caused the ratio to actually increase. So what I'm trying to say is that today we're seeing both parts of that trade working, or both parts of these asset classes working, the short S&P and the long gold. And in my view, this is the beginning of a trend, because historically these things tend to work for another 2 to 3 years, as we see the S&P 500 getting into trouble and gold actually becoming a better hedge as a haven asset. And and so I think this is just the beginning of a much bigger trend as well. In fact, if you go a little deeper, something that's been out of the conventional thought about markets has been the chart that I just put on the screen, which is the S&P 500 down year to date and gold miners up 33%. Well, a lot of people think that gold miners should be down when the S&P 500 is down. And I know a lot of people are looking at today's action and say, well, gold miners are down, Tavi, and that's okay. Those daily moves, nobody can predict. But you see the trend here. There's a clear separation, the rotation happening. That maybe under the radar, maybe people are starting to notice. Certainly people are noticing, like European equities doing better. More people coming out saying they're bullish. It is very interesting. Warren Buffett adding to his positions on Japanese equities. Are you noticing the trend? I mean, there's a lot of similar patterns. But to me, there's another thing that hasn't really, performed as well. And you can see here silver miners, as a great example of gold miners doing very well, and would expect silver miners to start performing well too, as they are doing very well. But you look at monthly, even with the decline today, monthly, these the silver miners are about to break out from a major resistance, going back to 2011 or so, and that could maybe the beginning of a real breakout in my view. And I'm paying very close attention to this. And the fact that we have silver specifically, not even silver miners, trading at where it is, call it, between 32 to 35, it's been kind of in that range. And the gold to silver ratio is still at near 90. You look at this ratio, we don't usually stay at these levels for too long. So I believe we're getting close to a moment where this ratio starts to really fall hard. And wouldn't surprise me if that happens in the following weeks, especially as we get the quarterly close here soon. So I'm starting to think that the derivatives of gold are starting to look extremely attractive, even relative to gold. The miners, silver, and even if gold falls, the miners are making a lot of money right now. In terms of free cash flow, in terms of bottom line in their businesses, given the fact that their cost structure remains, almost, half where gold prices are today. Gold prices go down to 2,500. Let's say it's a pretty large decline in prices. You would still see those margins to be very significant relative to history. So it's remarkable that not a lot of people are paying attention to that. Maybe we're in the new age or at the beginning of a new age of mining, in my view. So yeah, well, that's it for today. Appreciate everybody listening. I think Quentin is going to follow up and go next. But thanks everybody for watching. Appreciate the time.
All right, Toby's in Switzerland. He must have a PDAC bug or something. Sounded like he's under the weather a little bit. Poor guy, but I know how hard it is to go to a conference under the weather. But he's been there for a few days and sounds like he's had a lot of good meetings, a lot of good fun. Be anxious to see him when he gets back. Look, the mining space, the exploration space, I should be very specific, lives and dies by the cash that is available, the capital that's out there. Okay. And by no means is the gas tank full in this space. Okay. We've been suffering through 2-3 years now where there's been really a dearth of capital available for junior miners, even recently, up to maybe 2 or 3 months ago, just tough to find money. But we're starting to see the money come into the space. It's kind of a trickle right now. I'm not going to say it's a torrent. There's, a bit of trepidation. There's a lot of people are looking and thinking, well, is this a short-lived run? We've been kind of sucker punched so many times in the exploration world that I think proof is going to have to come with time. I think people will see that there's some legs to this over time. Okay. But we are seeing a few companies successfully raise money, and that's refreshing. Okay, that's really nice to see. Some of these exploration stories, and particular ones I'll talk about today here in a few seconds, have money, and that means this field season, which is coming up very, very quickly now, is going to be exciting. These are companies that you're going to want to probably take note of, watch over the next few months, because they have enough cash to get out and do their work, their exploration work, and hopefully make some news, some good news, noise, as we say. All right, so what I'm going to do here today, I'm going to do a little bit of a hybrid presentation. I'm going to talk about some updates, but at the same time, I'm going to look. There's no way in the world we are geared to even talk about placements and things like this. That's not our role. Be real clear here. We're not soliciting money for companies or anything like that. But we do have to watch these companies because like I said, it's life or death for most of them, what cash they have in the bank. That determines their fate. Okay, so what I'm going to do is kind of go through a view of how I see, a portfolio of companies that, some that have money and are going to get out there and do field work, others that might need some funds. I'll leave that to the companies to decide, but certainly have ambition to get out and do some work. Okay, so we're going to kind of plow through things, and I'll show you what I think is coming in 2025. All right, let's go to the first slide. One of the companies that we don't lose sleep around as far as financing goes is Snowline Gold. Okay, this company has successfully raised money. A lot of it, the support in the early days did come from groups like ourselves and a few other select investors. But now with the discovery at Valley, yeah, these guys are able to attract money, and that's great. That means they can go out and perform their art of discovery. And the company, although Valley is getting closer and closer to a point where it's almost drilled out. In other words, it's close to a point where we can kind of see the limits of it. Not saying the limits are closed off by any stretch, okay, but we can see a case here where this project could be now advanced through economic study. The company's kind of shifting. It's going from exploration, at least at Valley, to more of a development story. Okay, but they have a lot of cash, and I know they also have ambition to continue their exploration work, and that's what I enjoy the most. I'm an exploration geologist. I like to see what companies are going to pursue, and I think one of the biggest open doors, if you will, that I can see after last year's field season, as far as chasing an immediate potential target nearby to Valley is a particular hole that's on this image. It's kind of hard to see, and it's buried up in the northeast corner, the upper right corner of this image. Yes, this is a cut from the last news release. I think this release came out a few weeks ago. But there's a drill hole underneath the T in 3.24 gram per ton gold, and there's a black dot, and there's a hole that goes kind of northwestish. That hole, I think, is numbered 115, if I remember right. And that one encountered a very long intercept of very strongly anomalous gold. In fact, probably, potentially economic levels of gold in some of it. Okay, now notice that how far away that hole is from the rest of the drilling. Yes, there's a few holes to the north, but really that vector, which is going to the northeast, appears to be open. Okay, and I'm just kind of a bit obsessive at times, and that hole, like, I know it's not the world beater hole that they drilled last year. I mean, look at the other holes they drilled here, like this 617 meter of 1.68 grams. That's crazy stuff. Okay, and that's right in the Valley deposit. That's great, but that hole, that 115, that hole that I just mentioned, keeps nagging me. This is the one I wake up at 3 a.m. thinking, I wonder what's going on there. Okay, now I'm going to put it in context. All right, so we're going to go over to the image on the right-hand side, and you can see this is out of their presentation. I'd simply cut and pasted it here. You can see the area of Valley, which is kind of on the left-hand side of that image on the right. That reddish circle is more or less the same area that you see here that's been drilled. Okay, so that hole 115 is kind of to the to the right hand of that area. Okay, it's testing the fringes of it. And the thing that's always kind of nagged me is this Gracie target. We've learned about this target way back, I think in 2022, I think, or maybe it was 2023, can't remember. And the company did go in and drill a few holes here, but this Gracie target, which is to the east of Valley Discovery, has a lot of gold, guys. It has a lot of gold. It is a steep part of the property. It's steep terrain. You can kind of see from the shaded relief in that image. This is a steep mountainside. But man, there's a lot of gold shedding. All those little orange dots that you see there are telling us there is a gold system to be found, perhaps, in this area. Well, we know that from the magnetics, which is the colors that you see there, the rainbow colors, that there's a bit of a low spot there. That greenish area underneath the Gracie target was originally interpreted to be an intrusion, poking its nose up. And, in fairness, they did hit some dikes and, some granite dikes in those holes that were drilled there, but they didn't hit a mothership, okay? Now, why is the rest of the area around that bright pink? Well, that magnetism, effectively, that rock is highly magnetic, probably reflects an abundance of a mineral called pyrrhotite, which forms through metamorphism. Usually when an intrusion comes up and cooks the rock around it, You get, if there's sulfur and iron in that rock, you can get them to combine to form this mineral called pyrrhotite, which is magnetic and usually expresses as a very strong magnetic signature, like we see in this image. Okay, now here's what I'm starting to think. I'm thinking, all right, we can see there's a bit of gold kind of leaving the building here, so to speak, at Valley. Like it's an open door, and it's going off to the northeast from the Valley system. That's heading over in that direction of Gracie. Maybe the original interpretation that that green spot at Gracie was an intrusive. Maybe that's not quite right. Maybe there's an intrusive kind of buried up underneath that strong magnetic area. Okay. One of the things I've learned about exploration is, boy, when you see something kind of creeping off and leaving, your area of focus, you got to pay attention to those, because they often lead. They often, no guarantees. There's never guarantees in life, but those can lead to another discovery. Okay, and there's a few other details about that drill hole, that 115, that really caught my attention, like the intrusive rock itself that they hit in there, in that porphyry, that real knobbly porphyry that they've seen so many times, is in there. So there's a kind of a dike or some magma trying to squirt their way out in that northeast direction. Maybe they're going over to Gracie. Maybe there's something more to be found here. The company has a lot of money. Am I telling them, hey, go nuts, let's drill, 20,000 meters looking for the next valley out here? No, I'm not. But I guess what I'm saying is, given the money they have, I wouldn't be surprised if the company, and look, the company makes its own decisions, but I wouldn't be surprised to see them follow up on that hole 115, and see, if they can chase that thing. Maybe that's the better approach. Start at Valley and kind of work your way over towards Gracie, following the gold, following the yellow brick road, so to speak. Maybe that's a better way to lead to the next discovery. And look, it is not uncommon for these reduced intrusive systems to generate multiple lenses or pods or deposits. Okay, and in many cases, these can be big. Okay, yeah, look at Valley; it's huge. So really interesting. I think there's a lot of future here, and the company has a lot of cash. I know they're going to test other targets too. They have a lot of follow-up to do on some of their newest greenfield targets. I think they'll put some money there. And then they do have more infill to do here at Valley. Not a heap of infill, but they have some incremental infill that they must do. All right, let's go to the next slide. Sitka, man. These guys have hit the ground running this year. They've started their 30,000 meter program. They are cashed up. Wonderful to see. And they're being aggressive. Now, in the winter, you can only drill so much. You don't want to, it's good that they're drilling. I love this. But you don't want to just throw 10 rigs out there and start spending money like mad. Okay, it's snowy and it's cold and it's tough to go. But, they are able to drill. And they've already completed, it looks like, a couple holes, maybe one complete hole, and then they're on to the next hole. So 75 and 76. And here this week, they released some visuals. Go to the next slide. I think in terms of visuals, it's visuals around the gold that they're seeing in the drill hole. And they've really adopted the snowline, schematic for illustrating the, where they think they're going to see some good numbers. And that's by putting the little yellow stars where they're seeing visible gold in the core. That's great. Okay, this is wonderful. As I think late last year, when they got all their data back, I did a 3D model and I said, hey, this high grade is still open, guys. It seems that they've refined their targeting here, and they've hit it again. Okay, they're on the path. Okay, so this is very important. I think hole 75 is important, but in blue or green, they've got hole 76, which is even further below that. We'll see what they hit in that one. That'll be quite interesting. Remember, these reduced intrusions have these apophyses that come off, like the upside down cow. Well, this area at Blackjack target is definitely one of them, and they've latched onto that, and they're following it and doing a good job. So I think we'll see really good results out of this company this year. Go to the next slide. Okay, and look, I can't promise anything. I gotta be a little more realistic here, I think, at times. So I'll just say I like the fact Sitka is going to drill 30,000 meters, and I wish them a heck of a lot of luck, because I think it's a fantastic project. Goliath too. Okay, they saw McEwen come in here recently, and they've gotten some warrant exercises. I think. I mean, they've got money coming at them, and that's good. The company is it's definitely got a lot of legs. They have an ambitious program, strategized for 2025, and a lot of that work is really targeting this kind of new revelation that the gold system at Sherbet is likely closely associated with a particular magmatic event. In other words, we found I should say, they have found what is probably a smoking gun. The magma, the mothership that generated the gold-bearing fluids that created this deposit, also created a number of dikes. So these are cracks in the ground where magmas rose up through. And all of these orange and yellow features that you see are basically interpreted dikes that exist that kind of lace through the whole Sherbet project. And what's really important is they did have a few holes there. Of course, they're targeting the Sherbet zone, so they're poking holes down at this. But they did have a few holes that actually cross some of these dikes. And lo and behold, they hit nice mineralization, like you see on the left-hand side there. There's that core is a dike. Okay, it's dikos. It almost looks like something out of snowline, believe it or not. It's a reduced intrusive dike, probably coming off a larger magma chamber at depth, but it's just laced by little quartz veins, some with very high-grade gold. And they've actually seen some really, really nice assays out of that. Now, what does this mean for their exploration? Look, I think they're starting to see that not only do they have these sheet-like layered high-grade, not flat, but low-angle lodes. They have these upwelling zones along these dikes where both the magma and the fluids came up, and those are in their own right are targets. Okay, now you think back the first year they were out here, they actually recognized some of these near vertical things. I think they call them the Cloud9 and something else, can't remember. They had different names, but I don't think they realized that they were so closely associated with those dikes. And now they do. Okay, so now they have kind of a new holistic model to explore. They got money. They're really, this is really going to be an interesting year for them. I think the most important thing around Goliath is they know from all of the drilling they've done today where the highest grades are starting to kind of coalesce. And I think there's going to be a particular focus on chasing that higher grade area, which is kind of over in that Bonanza lode and associated dikes, really, on the what would be the south side of the mountain, which is the top image in the upper right there. All right, let's go to the next slide. I try not to be so long in my explanations here. Get excited. But look, Hannon Metals, this Provisto alkalic system is absolutely crazy. Okay, I was in Peru right before COVID. I went down there to see Mike Hudson and his team, Lars, and et cetera, all of them. And I remember, daily looking at my phone thinking, oh my gosh, I got to get home because they're going to shut down the airlines and I'm going to get stuck in nowhere, Peru, and da-da-da. Like, it was crazy. But this was the last place I went to before COVID. Okay. And, Mike and Lars were telling me what they wanted to do. Yes, they were looking for copper. But I said, guys, if you blag up and down the east side of the range here, the Andes, you could probably find your targets just with these stream sediment samples. So I showed them how to take blag samples, and that's what they did. They did that for like two years, 2 seasons. During COVID, they just collected blags up and down for like 150 kilometers or something. And guess what they found? They found this monster gold anomaly, this Provisto gold anomaly. They dug a trench on this. I think it was late last year. They got the results, 69 meters of 2.4 grams in the first trench that's been dug here. I know that it's the rainy season. It's kind of just at the end of the rainy season. I think from talking to Lars, I think they're going to be aggressive. They're going to get in there, dig a lot more trenches. That area they dug the trench just happened to be one of the easiest places they could get to. But they're going to dig some more trenches. What should we see out of the company? I think we're going to see a lot more news around trenches. And at the same time, they're working in the background to get their drill permits to come in here and drill. Okay, so Provisto is a story in the making. It will take a little while to get that drill permit. Doesn't bother me too much because we will see a lot of data come through as they trench the property. Now, they've also recently found this little Provisto copper discovery. I say little, it's not little. It's a pretty big target. It's nearly 3/4 of a kilometer long. And they've dug some trenches here. Now, bear in mind, at surface trenches, there's leaching, okay, because rains trickle down through the ground. So the numbers they see here, they're very interesting, like 0.1, 0.2% copper. But that rock's also been attacked by rainwater over eons, okay, and it's probably leached some of that copper. So what they're saying here is they found a big copper anomaly, and they've demonstrated that through these trenches. Okay, this is not to be taken lightly. I think in addition to this gold system off to the side here, we now have yet another one of these copper targets. They have other copper targets further to the south at Bellin, and I think they're going to drill those here not too distant future. But this Provisto gold target, that's my favorite. I love this story. I think they're going to find the next Cripple Creek. All right, go to the next slide. Okay, silver 47. This excitement around silver seems to have infected a lot of silver bug types, and they're putting money to work. Okay, we're starting to see silver stories garner. Oh, by the way, with Hannon, they had some warrants exercised, so they're basically cashed up. That was my punchline there. Sorry. But with silver 47, a lot of attraction for silver. And people are now picking up on this story. They do have a resource put together. It's kind of an early stage, high level resource, inferred mostly. About 15 million tons, a little over 7-point-something% zinc equivalent, which is about 335 grams silver equivalent. Okay, but it's a big resource. Okay, and it's, in my view, potentially just getting started. Okay, I'd really like to see this. I love the fact they've raised money. I think this is a good sign. And I'd really like to see this company not only drill to expand both the Dry Creek and the West Thunder Flats targets, but look at all these targets they have. All these red stars are basically VMS targets that they need to test this year. And I'd love to see them test several, if not most, of these targets over the course of the year. They have the money to do it. They have the drills. I think this could be a really exciting story if they get out there and do some hard work this year and drill some holes and maybe they make another discovery or two of these VMS systems. This could turn into a camp. Okay, so I really like the fact they got the cash. I like the sign that the market's telling us silver is back in vogue, and I wish them a lot of luck. All right, let's go to the next slide. This is an interesting story because this isn't quite exploration. They've explored at Dome Mountain, don't get me wrong, but Blue Lagoon, it has actually achieved getting their permit to develop the underground mine at Dome Mountain. And this is kind of a jaw-dropping, monumental achievement. It's tough to get permits these days, guys, but they managed to get a permit in BC. It sounds like BC is really trying to get open the door to mining and get things moving, which is a great sign to see. And here we go. Blue Lagoon has, after 3 or 4 years of chipping away, they've gotten their full permit to operate at Dome Mountain. Now, the company has a resource here. In fact, basically from the adit level up is most of the resource. They got like 200 and some odd thousand ounces, I think 220,000 ounces, somewhere in that range. And it's something around a half an ounce per ton. I mean, this is a very, very high grade project. Now, the other exciting part is they have access to a mill with Nikola Mining. Nikola is a little mining company that's not too far away. They have a mill that can treat the rock from this mine. Okay, so this is a good story. You have basically a really high grade asset. You can mine, truck it over to this mill, and you can produce really high grade concentrates. I know there's some leverage with those concentrates because the party that buys the concentrates is the same group that buys our concentrates in Bolivia. So I know that there's a very high demand for those, and I think there's some leverage for finance around that too. But if there's one company I would say has a lot of momentum we'll call it in the small space of mining, but it has a lot of momentum to actually get into a strong cash flow scenario, it is Blue Lagoon. I got to give these guys credit. Now they have brought on an advisory team, a mining advisory team, and they've really upped their game here recently to to give a lot of confidence to the market that they can pull this off. They got First Nation support, but I really want to see these guys succeed, because if this story can succeed, a lot of other stories in BC and really elsewhere in Canada could probably pull off the same success. All right, let's go to the next slide. Okay, one of these stories that is just, it's got so much support because of the joint venture structure, the earn-in joint venture structure they have with Anglo Gold. It's Inflection. Okay, Inflection Resources has a very large land package in New South Wales. They're looking for blind, we call it Cadia type porphyry systems. These are world-class copper gold porphyries. They're older than the ones we see in British Columbia and the US here. These are quite a bit older in age, but geologically, they're very, very similar. Okay. And after 2 or 3 years, I think, since they signed this agreement with Anglo and poking a number of holes down into the ground, they have finally started to see what is getting closer and closer to perhaps a discovery. Okay. It's not an economic discovery at all yet, but man, they're seeing some good numbers. Okay, 0.36 gram gold, 0.07% copper, in that middle tag there, over 54 meters. These are very, very interesting numbers. Here we got 35 meters of 0.4 gram gold and 0.06%. Look, if they drill around here, my hunch is there is something bigger and hopefully more Cadia-like. What is Cadia? It's a giant, hundreds of millions of tons porphyry, and it grades about 0.5 gram gold, 0.6 gram gold, somewhere in that neighborhood, and about 0.3% copper. Okay, could there be a discovery like that here? Yes, geologically, this looks very similar. Looks like they're on the edge of it. Where is it? Don't know. Is it a bit deeper? Is it in or out of this section? Is it off to the side? Don't know yet. But I think the company's on the right track. And with the money they have from Anglo Gold and the commitment, I think they could, we could wake up one day and be pleasantly surprised. Let's hope. Okay. No promises, but it would be just delightful to see a brand new Cadia type discovery made by a company in our portfolio. All right. Go to the next slide. Okay. Brixton. Now, Brixton has cash. They got pretty decent treasury. I can't remember exactly, but it's a few $1 million and enough to go out and do some work this season. And look, late in the season last year, they found some really interesting copper occurrences. I really hope they follow up on those. But the other one that really catches my attention here, and I think I think the company's openly said is going to be a big focus for them, is the Trapper Gold target. Okay, they've drilled a lot of holes, but in a very, very narrow area. There, you can see kind of in the middle of that brightly colored image. The geophysics is telling us, and the surface results they have is telling us there's a lot of structure in here that could potentially host more gold lodes, gold veins, whatever you want to call them. My view is this is an alkaline gold system. I would love to see the company do some CSAMT and look for those gradients like we did in Tuvalu in Fiji, because that improved our odds of successful drilling. I know that people watch this video. Hopefully they listen here and maybe do a few CSAMT sections. But nonetheless, in the magnetics that we can see here, there are clearly some big structures, and there's gold values that are sprinkled along those structures. So I think there's a lot more work that should be done here, and they will allocate a lot of their budget towards gold this year. All right, go to the next slide. Mogotes, they have a good treasury, and now they've picked up all of this new ground down in this Chile-Argentina border region, and they're sitting right next to this Aurora deposit, which now belongs to BHP and Lundin Mining, by the way. Okay, so I think that deal is now complete. That was a $4.6 billion acquisition, guys. I mean, there's no way I would diminish my enthusiasm for what these guys could potentially deliver. It is exploration, could be nothing there. Sure, no problem. That happens in life. We know that a lot of our companies don't deliver. Okay, but we're in it for the discoveries and backing smart people who do good science, and try to make those discoveries. No guarantees, but man, these guys appear to be on the right path. That area that's basically to the left on the top there, where it's colored, that is Magote's tenure. That's their ground. And there's a gap there where it's white, and you might say, well, that's strange. Well, that's that newly optioned ground. Okay, they are doing geophysics and other work to try to fill in the data in there so they can develop these targets better. They're also doing work at surface to map and understand the alteration packages better. You know, it doesn't mean we should go out and drill immediately. No, let's let them do good science. I did get to see the guys at PDAC, and I know that they're doing a really good job in the field. It's getting a bit late, so seasonality is a big factor here. You got to understand that as we go into spring, which is the case right now in North America, they're going into fall. Okay, so winter is going to be in a month or two, and you don't really want to be up on top of a 15,000 foot mountain when it starts snowing. Okay, so let's see them get their field work done. Does it mean they're going to make a discovery right away? Well, I think we'll see a lot of good data come out of this program, but the drilling might have to wait till, say, February. When can they start drilling again? Probably February, March, something like that. Okay, let's go to excuse me, totally backwards. I mean, August or September is when they can start drilling again. Okay, go to the next slide. This is some of the work they're doing. Okay, and what keeps me committed to this excitement around this story is every photo they send out. Yeah, it's some guy sitting on a weird orange outcrop, but I know what this rock means, and I know it from these descriptions. I know that they're seeing the right things. They're basically seeing the upper expressions of, like the epithermal expression of a porphyry that could be below. And all of these rocks appear to be mineralized. A lot of this is on their newly acquired ground. I mean, this is exciting stuff. I want to see them do this good science and put these maps together and build the best targets they can. Okay, do not get in a rush, because as soon as you get in a rush, you spend your money and you're out of money and you're crawling on your knees looking for more money. So what? Okay, you got good treasury. Do the hard work and get your targets lined up properly. Okay, that's the way it should be done. All right, let's go to the next slide. Novo. Okay, I'm director. We have go back one. No, there we go. We have a fair bit of cash. We sold a position of our SCM shares a few months ago that gave Novo a lot of cash to work with, and we have a number of projects lined up for drill testing over the next few months. In fact, I'm going to be going down to Australia in the next couple of months. We have a lot of drill targets we're going to test, and one of them we've been wanting to follow up on, but for lack of cash we haven't, is this Bala Bala project. Okay, this is north of the Hemi discovery. Hemi, which was the gray mining, now is bought by Northern Star. It was a big transaction. I think it was 5 billion Australian dollars acquisition. It was huge. And that's on that structural belt. If you look on the left, that was on that structural belt. There's a black line that trundles through there that goes kind of southwest, northeast. Now, there's another belt, the Bala Bala structure, this big structure that we're focused on to the north. And we think, based on the magnetics and stuff that we see on the right-hand side here, that there could be another Hemi analog. Okay, so this is one of those areas where we do think it's all covered. It's flat as a pancake there. It's covered. Drilling holes down through the sand and stuff to get down to the target is necessary. So we're going to go out there and we're going to basically drill lines of holes across some of these best targets. This is intriguing. This is how big discoveries are made. Has anybody really done any serious work here ever? No. This is a pure greenfields exploration play. My team's done a great job developing the targets, and we are going to go out and test these things for the first time. And that's how Hemi was discovered. It was a blind target that was found very much like what we're doing here. So with a little luck, maybe we hit something. Any promises? Nope. No promises in exploration. But we got to try. Let's go to the next slide. What is this company? This is interesting. Westward. This is a company that is now well cashed up. It is a Nevada exploration company. I promise I will talk more about this in the not too distant future. Okay, but I'm going to throw out a teaser, plug for them right now. When I say plug, I'm not really, trying to promo plug, but I want to give a little bit of feel for the geology that these guys are tackling. All right, I went to Google Earth and I literally took a screenshot of the area. Their property is basically towards the lower left of this image. It's not shown on there. I didn't have the shapefile to go in and plug it in, but basically it's around this Bald Mountain area. Okay, now where is this? This is kind of north central Nevada. The location is called Cortez, Nevada. If you want to look it up, you can go there. And in this image, believe it or not, there's over 100 million ounces of gold that have been produced or, in inventory and resources and reserves in the ground. Those kind of, scratching, areas up in the north and the center, those are big mines. Okay. The one in the upper left is Pipeline. Also Gold Acres is up there. The one that's more towards the center, that's Cortez Hills, as well as the old Cortez mines. Huge deposits. Okay. 15, 20 million ounces, each of them. We also have Gold Rush. It's kind of hard to see, but Gold Rush is a drilled target or project that's to the east, so the right of Cortez Hills. And we have other deposits in inventory here. I won't go through the whole detail, but I love the Cortez area, and I've said this before in context of some other companies we've invested in, because if you look at the big districts in Nevada, okay, each one of these districts, for example, Carlin, they have a long history of exploration and mining, but then there's this one moment where the big one is found. Okay, in the case of Carlin, it was a gold strike deposit. Basically, gold strike, all of the mines up into that point were, a few million ounces, maybe up to 20 million ounces, something like that. But then, bam, they found this gold strike deposit, which was over 50 million ounces up in the Carlin Trend, which is, by the way, it's about 80 miles to the northeast from here. Okay, but the Cortez area, they've never found that big monster. Okay, that big monster. Okay, now I have a bit of history with this project because I did a reconstruction for a company I used to work for, where I basically pushed Nevada back together pre-faulting to see how things lined up, what they look like. And I've talked about this before, like New Legacy. I still love that ground. It's a shame, like Kevin said, it's a shame they don't have money right now. I'd love to see them get back on their feet. But this is one of those other pieces of the puzzle, so to speak, that I really, really, really like. In fact, this was my number one target. New Legacy's ground was number two when I went out into the junior space and started working in exploration in this world. Okay, now this project has been tucked away for years. This project we're going to say it's right there at Bald Mountain, more or less. It's been tucked away for a long, long time. And nobody's really tackled it because it is what we call off trend. Okay, if you think of a trend as being linear, so like from Pipeline to Cortez Hills to Gold Rush to New Legacy, it's a straight line. This one is over to the southwest of that line. But there's something really interesting about Nevada. Over the past 20, 30 million years, the crust has been pulled apart. And so the different mountain ranges that we have across the state have actually pulled apart from one another and become detached. Okay, so that means that the geology of one can be matched up more or less with the other. And if you push this back together, voila, you got a whole picture. Okay, now notice the valley in the bottom there. It's kind of symmetrical. Like the margins of it go down and they go down like this. That's one of those, chasms, those open up, those valleys that have opened up through extension as the crust has been pulled apart. Imagine pushing Bald Mountain now back, push it back to the east here. And Bald Mountain would all of a sudden be more in line, not quite in line, but more in line with the Cortez Hills Pipeline Trend. You push that back over here and it's getting close. Okay, now the target that these guys have developed, and they've done geophysics, they've done geochemistry, they've done all the hard yards, is probably under the word under the OU on Bald Mountain, somewhere around that location is where they're going to drill these first holes. They've identified a target that's really interesting. Very high arsenic values at surface, so it's telling us there's something coming up from below. But they also have really good geophysics. And I don't want to spoil the punchline because I will talk about this more another time. But I would say this is one of my most compelling targets in Nevada. I'm delighted to see this company pick this up. And these guys are young. They're full of energy. I do know some of the geologists who work here. I've worked with them in my career. Very smart people. And I think they've got a reasonable shot. Is there any promise they're going to make a big discovery? No, there's never a promise. But I do think they're in the right neighborhood. And, seeing them get the support, the financial support, means the market is turning, guys. It's really encouraging to see these greenfield companies, these companies that want to go out on that big elephant hunt, get some money and go do big things. And we're proud to be supporters. All right, go to the next slide. And I promise I won't take as long as the rest of these slides. Okay, I'm going to kind of cut to the chase. So there's a lot of companies that we'll say are getting their ducks in a row. Okay, it has been a tough go for a lot of junior companies, a lot of exploration companies. But we're starting to see a lot of stories get oriented and get their back into their investment thesis. And that's nice to see. So I'm going to go through these relatively quickly, but I think they need to be said. Go to the next slide. Okay, Newfound Gold. Look, this is a company that's in transition. They made the discovery. They did the left hand of the Lassonde curve thing. Okay, they went down in there in that development, trough now. What have they done? They brought a new team in. I got to speak with the new team about 2 weeks ago, right after PDAC. We had a follow-up call. Very exciting story that Keith and Paul Hewitt wasn't on the call, but Keith Boyle and other members of his team were on this call and told me what they want to do here. And I think they're making the right steps. Okay, they're going to take this thing from an exploration story, which it's been a great exploration story. Okay, but they're going to make it into a mine, and that's one of my common themes. Is you got to find a deposit with the intent of mining it. Okay, and I think these guys get it, and I think this is one of those where now we got the right-hand side of the Lassonde curve to look forward to. Go to the next slide. Lion One. Okay, Lion One. I love Wally dearly. I know he listens to these, and I really hope he's doing okay. Heck of a guy. One of the legends in mining. Respect him tremendously. He's had a heck of a history. But they have brought in new management into the company here recently, and I think it's actually going to be a good outcome. One of the things that the new management is pursuing is what's called a flotation circuit at Tuvatu Gold Mine. Okay, they're going to put into the mill a flotation component. What does this mean? Flotation, in my view, is how they're going to achieve higher gold recoveries and really just kick this thing into high gear. There's two ways of growing. You either mine more ore or you recover more gold out of the ore you're mining. Okay, if your grade is kind of fixed and you can do one or the other. Well, they've realized, I think, in rightly so, that they can grow their gold production. Their revenues will increase by pursuing this flotation circuit. The other thing I know is that those flotation concentrates are very highly desired in the concentrate market right now, and they could probably leverage that to finance this expansion. This is a company, like I showed about a week or two ago, where their trend is improving over time. They're seeing more tons, better grade, more production, et cetera, et cetera. Add this to the mix, maybe they, in about 6 months, they come back and they're laughing here. Okay, there's never promises. Okay, there's never promises. Mining is a tough gig, but I love to see them taking the right steps. Okay, so I think this is important. Let's go to the next slide. El Oro had a killer hole. Okay, so this is one where I have a bit of an update. So this was a news release that came out not too long ago. Crazy long intercept. What is this? 151.47 grams over 135 meters. Okay, that's a lot of silver. It's almost 5 ounces per ton silver. Oh, 135 meters. And that's within 309 meters of 90.92, which is about 3 ounces, not quite, but close to 3 ounces. That's a big darn drill hole. Okay, that's nice to see. And it's an infill hole in this area that they're trying to beef up their infill, the knowledge to improve their resource. Guys, if there's one punchline I will say here, these guys need to drill the infill holes, period. Okay, this must be drilled properly on a spacing like, say, what Snowline did at Valley, where they can build a solid core resource in this higher grade part of the system that they can then take the project forward. Now, what does that mean? It means they're going to have to raise some money, okay, because drilling costs money. But these results tell us that the system's there and it's going to deliver. All those kind of gaps and areas that were poorly understood when they came out with the first resource are now going to be improved by results like this. It's that simple. Okay, the company needs to keep going and get that cash in the door so they can keep drilling. Let's go to the next slide. Okay, I'm going to touch on all of these really quickly. I know there's a bunch. It's a bit overwhelming. PJX. PJX is looking for that Sullivan zinc discovery up in BC. Did they find it last year? No, but they gathered enough data that it looks like they know where to drill this year. And they do have some cash so they can get back to work. I think May, June, when the snow clears, they can get back in the saddle. That's encouraging. Do they need to raise some more? I don't know. The company has to make these decisions, but I do know they have some cash and they can get back to work. Okay, Rackla made the grad intrusive, reduced intrusive that they discovered late last year. To me, it looks like the real deal. I got to see some of the stuff at PDAC a couple of weeks ago, talked to Simon briefly. I'm telling you, man, if there's one where it's just sticking out of the ground, you can see just veins all over the place, it's Rackla. Okay, I know that they've had 2 years where they've tested things, didn't quite pan out, some mixed results in a couple of cases, but this one at grad, my gut says this might be the year that kind of catalyzes them. Any promises? No, can't make any promises, but they at least have some channel samples across the outcrops where they return really strong gold results. Okay, so hopefully we see those replicated in the drilling that they do. How much money they have right now? Probably enough to be dangerous. Yeah, so basically you get the theme. Everything on this slide deck, or in this slide in particular, company's going to have to, get their financial ducks in a row, like I said at the beginning. All right, Kingfisher, look, Dustin's done a great job bolting together land. Is he done yet? I don't know. You can never tell with Dustin. I hope, at some point here, he kind of culminates in whatever endeavor he's pursuing as far as conglomerating these projects together. But he also now needs to get to work. The field season's coming up. We want to see some action out of him. They've already got a huge inventory of targets. Some of them are very close. For instance, the Galore Creek, which I think is a Hickman target in particular, looks really ripe. Okay, love to see the company get out there and raise some money, drill some holes, do the work they need to do, because I think they have one of the best land positions in the Golden Triangle. Altamira, I firmly believe they are on a very large reduced, it's an older system. Okay, it's much older in age, but it's a reduced intrusive type system. So think Sitka or Snowline. It's basically the upside down cow. And they've already found 5 porphyries that are scattered across this area. They need to drill. They need money. They need to drill. Irving, the company, and I'm director, the company has 2 great projects drilling on both. So both at Yamagana, which is supported by Newmont and Sumitomo, the financing there. And we also have GX funding the drilling up at Omu. I have aspiration though to drill some holes myself. I never like to sit still, and I have some other targets that I would love to test. So to do that, guess what? I need a bit of cash in the bank. We do have good support, but it would be nice as gold prices lift to get spread our wings and get going again. All right, Intrepid. I think Kevin mentioned this. Look, U.S.-based copper gold story. What's not to love there? Okay, all of a sudden the world's with Trump's pronouncement about critical minerals. All these stories in the U.S. are taking off like a rocket. Okay, Intrepid's going to be one of. It's in Arizona. It's in a region that's already known for mining. It's a great system. They've got big neighbors around them. Where the company goes, I don't know, but let's get back in the saddle, guys. Come on, let's go. Okay, Red King, and I talked about them a couple of weeks ago. I really think at Kendall they had a near miss. Long intervals, like or 600 meters of 0.1x% copper. That ain't no fluke. Okay, they need to get back, get somebody, get back and drill some holes. Darn it, let's go. BCM. Here we go. Another story. It's in the U.S. Copper. Guess what? The U.S. is waking up, realizes it's got to have these metals, or at least our new administration does. That's great. BCM, all of a sudden, I don't know what's happening today, but somebody's clearly fallen in love with the story. That's great to see. Okay, maybe this press about Trump's, I don't know if it's an executive order or what the heck it is, but this pronouncement about critical minerals is starting to light a fire under these guys. Okay, all of these American stories. This is good. It's good. And it's not just copper and stuff. It's gold too, which is really good. Okay, but BCM, come on, let's go. I think they're trying to get their ducks in a row. I think they'll have some, hopefully, promote material. The guy that did the videos for Newfound, and then he did the videos for Goliath, I think, he's going to be doing some videos for BCM. We call him Hollywood Tony, a good friend of mine who used to work in Hollywood, and he now does videos for mining companies. And I think they're going to, hopefully they utilize them and make some cool videos here soon. Tectonic, look, they hit it. Alpha Bowl, that hole, I know it's short, 65 meters. Okay, whatever. That's where the grade is. That is telling Tectonic they need to get their poo in a pile and get back out there and drill and not wait until August or September. I want to see this company go. Okay, that, in my view, that drill hole is telling us more drilling is warranted. That drill hole was basically right under the head of that placer deposit. I think it's like 600,000 ounces or something crazy. That's the source of the gold. It's right underneath their nose. Okay, in my view, they need to get going. Get your traction and go. All right, we're there. We'll try to help. Whatever. Rally the troops. Let's go. Alpha. Look, these guys, they pull off miracles. I don't know how the heck they do it, but man, they got good projects. Don't get me wrong, but man, they fight tooth and nail for money, and good on them. Okay, I like to see people that work hard. So we have a lot of respect for these guys. One of the things that really caught my attention, I talked to Berhani and the new fellow there. I can't think of his name. Tim, I think it was. About Aberna. They're going back to Aberna because they did some remodeling of it, and holy cow, it looks like the copper gold that we first developed our investment thesis around is actually diving in the opposite direction from which they drilled. That's interesting. He explained why. That's pretty cool. Get back to work, guys. Condor. I'm director there. I'm trying to help Chris. Let's get back to work. Ever's got a lot of targets. He's got a lot of targets he wants to test. Ever's one of my best friends and ever, and pun intended. And we're going to make stuff happen. Okay, we're going to make Condor great again. Western Alaska, two of the best explorers I've ever seen in my life. Kit and Joe are legends in the mining space. And then you got Peter as well. I mean, Peter McGaw's advising him. Out of all the companies, like, I have one of the smartest geologists working for me at Novo, and he went to PDAC, he went to all the booths and stuff. He came to me, and not knowing that I knew Western Alaska. He said, "I've got this story. It's the best story I've seen here." He says, "These guys at Western Alaska have the goods." I'm like, "Oh, tell me more." And he told me though his view of their data, and I can't agree more. Okay, and then I told him, well, I happen to know the company. I love the story. They're going to find the big one this year. Is there any promise? No, but I really wish them well. They need to get off, get in their saddle and go. Let's go. SK Mining, we had a lot of really high grade results. Again, I'm a director. We had high grade results thanks to two young prospectors, John and Jeff, who I've spoken with here recently. They know Bruce Jack. They know other discoveries in this region really well. Like these guys have been working in the area for a long time, and they sampled this new area down in the south part of the SK consolidated SK property and found high grade late last year. Okay, they're just chomping at the bit to get back in the field, and I want to support them. We do have some money, okay, so we can get going. It's not like we have to go out and beg for cash right now, but we want to see these guys back in the ground. I talked to him yesterday. Juggernaut. Look, I talked to Lele. Manuel is their geologist. He is one sharp cookie, and he showed me rock samples from Juggernaut. I said, man, those look like Goliath. They look, yes. Okay. Then we went over it in detail, and it's like, holy cow, lightning twice, maybe. Okay. Juggernaut is quite interesting. At first, I was thinking, okay, are they looking at this as a porphyry? And that's not going to fly. Okay. But the veins there look very sherbet-like. Okay. So that's very intriguing. Now that we know what sherbet is, those veins are related, like I said earlier, to those dikes and the magma. I think there's another system like that at the big one, which is their property. Barksdale. Oh my God. You want to talk about, this is like arm-to-arm combat. I'm trying to get this puppy going again. But late last year, we had that drill hole. Did we hit a home run? We face planted right as we were getting into the mineral system, but we had short intervals. I'm a director, right? Short intervals of high grade copper and silver too, which is really interesting. And it looks a lot like the mineralization that they see adjacent to us at S32 in their new peak discovery. Okay. I think we were just getting into it. We're going to fight tooth and nail. Don't know how we're going to conjure this up again just yet, but I think soon we'll get some support. Mining is becoming very trendy here in the U.S. in terms of investment, and maybe Barksdale could be a beneficiary of that. Core assets. Oh my gosh, here's another one. They've hit basically almost every hole they've drilled. They've hit nice high-grade CRD mineralization. Do they have evidence of a porphyry? Absolutely. There's something big on that property. Do they have any money? No. Okay, what a crying shame. Oh my gosh, this is a company that has young guys involved, and I know they're not going to sit on their butt. Okay, they're going to get out there and they're going to get stuff going again. All right, best to them. All right, so that's a short version, skinny version of a lot of companies. Let's go to the next slide. Now I'm going to throw one more name out at you, because everybody that was on that previous slide should pay attention to this slide right here. There is one company that we have in our portfolio called Lab Gold, and they are the beneficiaries of a property sale that they sold to New Legacy, or to Newfound Gold. Sorry, my brain's not working today. To Newfound Gold a couple of years ago. They now have, I think, over 16 million or something dollars in the bank, or dollars in stock, or whatever. They got a good treasury. They don't have a property of merit right now. Okay, this is a company that has a lot of cash and needs a property or a company to marry up with. Guess what? There's a lot of companies out there. I just showed you a previous slide that need. Okay, so I'm trying to kind of stir the pot here. I don't mean to, push anybody, but hello, these guys need a project. All right, let's go to the next slide. Think that might be it. Yeah. Okay, Kevin. I tried to get an hour.
Awesome. Thank you, Quentin. So it is very exciting to see money coming, back in, starting to trickle in, but it's starting to flow back into the exploration industry, to see investors getting excited. It's great to see Trump with his executive order prioritizing mining in the U.S. And go read that executive order. It makes it very clear that this is a top priority now, to accelerate the permitting of all kinds of mining projects, and I believe that will flow down to the exploration segment as well. And we'll be doing a lot of research to further understand what opportunities there are in our portfolio to invest, given this new executive order. So we own about 70 different companies across the mining industry, across our activist exploration portfolio. We have about 70 different exploration projects. We have a number of other large and mid-cap producing mining companies in the portfolio too. But the biggest opportunity really is on the exploration side, because that is where the real wealth can be created in this industry, especially if you have the expertise of people like Quentin, who we have as part of our team, helping advise us on what to do. And you know, as Tavi's charts have shown, that, you know, this, and my charts, that this, you know, the exploration segment of the mining industry is the best value opportunity out there today. And the mine, you know, mining, gold mining, and gold, silver, and copper mining at large is a great opportunity that's depressed relative to the metal prices. And I'm talking about the producing mining companies, but the exploration segment is where the real big upside is. And we've got a portfolio of 70 of these companies. Quentin probably talked about half of them today. You know, it's still early. We think no guarantees. You know, there is risk in mining, as our disclosure at the very beginning says. And you know, it's a lot of these. You know, many of these companies will not make the big discovery, but a good chunk of them will. And we've already had some big discoveries across our portfolio. And this is where you create the wealth, because you have a broad-based portfolio. You don't need every company to hit the next gold strike deposit. You know, if you have 5 or 10, you know, really big high-grade discoveries, it can more than make up for the entire portfolio, and we can have some of the best performance among the resource funds out there. And you know, take a look, go to our website, look at our performance. We've been able to put up some pretty good returns over the last 4.5 years since we launched this fund. And I think, you know, no guarantees, but I think we're on the precipice of a really big run here with the macro confluence. Anyway, so that's all I have. If you're interested in learning more about our strategies, please reach out to Merrick. His contact information is right here. We'd be happy to send you some information, set up a call, and tell you more about our strategies. That's it for this week. We'll be back in 2 weeks. Thanks, everybody.